Hello, everybody, and welcome to the US session brief. We're on Friday, the 19th of May 2023. Let's take a look at your market headlines as we enter the final US session of the week. So, firstly, happy Friday. The big news today is the discussion between Fed Chair Powell and former Fed Chair Bernanke at 11 a.m. Eastern Time. That is in 2.5 hours from now, I want to say. Obviously, I'm not in the US, and I'm pretty sure that is what we should be expecting. Um, this should be an interesting one, not just for the markets at the moment, but also to hear what Bernanke has to say about Powell trying to unwind the years of QE that Bernanke pushed forth quite firmly. Um, Dia just reported before the market results were fantastic and they raised guidance. Expected earnings would be affected by declining commodities prices and tightening lending conditions. And while that still remains a concern, they have sidestepped some of that to post fantastic results. EPS came in quite significant high, $9.65 per share versus an 8.47 estimated, and then revenues increased 33.3% year on year. $16 billion versus a 14.87 billion estimated. We had quite a rally in markets yesterday, S&P in particular. We'd been saying throughout this period, basically, markets were getting ready. They were ready to break. We'd had nothing for 2 weeks, basically. But usually when you get these periods, again, just to repeat, markets behave in similar ways time and time again. Hence why building systems and backtesting them is of utmost importance. And then we secured that break. We're closed above and out of the descending trend line. We were getting in this wedge pattern, remember, this triangular pointy end of it as well. Broke above the highs, and then yesterday just another solid push higher as talk about agreements on the debt ceiling started to become more promising in terms of a deal being agreed between Republicans and Democrats. Nasdaq as well hit a year-to-date high, closing 1.8% higher on the day and 3.42% on the week. That's the best week since end of March. We're also up on S&P right now. In fact, we're trading right at the top of the daily bar, as you can see, the candle, and looking to potentially open above yesterday's high. Gold is somewhat trying to recover after not the best 24 hours, it must be said. Remember when we were at that 2000 handle, I said my bias would be to the downside. If we can't hold at 2000, we see a strong close below. That's pretty much what we got. We rejected off that descending trend line time and time again, and then we fell down to our 1950 level, that horizontal level coming in quite firmly there to hold us up for now. But we, just over the past few hours, we seem to have seen the sellers jump back into that rally and look to push back down to the 1950 for a retest. Let's just quickly wrap up what we've seen in Asia and Australia today. Asian markets mostly higher. BOJ's Ueda vows to maintain easy monetary policy given economic uncertainty. We can see here the dollar against the yen has been really strong over the past 2 weeks now at least. But now getting a crucial yesterday, especially a crucial close above what was really strong resistance. Well, it was a double top that we've seen this year at 137.70. Now we're above that. We need to see this market hold above there now if we're going to see a continuation of this trend and find new buyers and then move into 140. If we go back below, then that will be worrying for bulls and you'd start to consider moves lower. But I'm looking to for this market firstly to hold above 137.70, not be exhausted and fall back below there and the sellers jump back in these levels, hold above there. Maybe I'd be happy with a pause there for the next few days. Look for that sort of price action, which then you see a breakout higher, maybe an inside bar, or it could be any typical breakout setup, and then look to trade it up into 140. Dollar strength is to blame for the yuan weakness, according to China's state-owned newspaper, as the yuan is set for its biggest loss in 3 months. Chinese state banks seen swapping yuan for dollars in forward markets. European equities have been higher as well. The DAX pushing higher, financial services leading the charge, real estate lagging. ECB reportedly stepping up scrutiny of EU lenders' liquidity reserves. UK government is revealing a long-awaited $1 billion semiconductor strategy. Q1 reporting season in Europe in final stages. German producer prices for the PPI today posted the first monthly increase since September 2022. Walmart doubled, over in Americas now, Walmart doubled reported a double beat with an increase in same-store sales. Margins were down but improving on a sequential basis. Fed officials are split over whether to pause in June or maintain tightening bias. Apple are going to offer ChatGPT for iOS through the App Store. Disney has cancelled a $1 billion investment in Florida that would have brought 2K jobs to the region. The debt ceiling resolution could lead to $1 trillion in T-bill sales, which could drain liquidity from the banking system and raise short-term rates. And this is supportive of an argument for the US dollar higher because they're going to be requiring there's going to be dollars sucked out of the private market, of the banking system, leading to a shortage in dollars, basically. And then we've seen Icon, who's a hedge fund manager, admitting bearish bet against market cost his firm $9 billion over the past 6 years. So yeah, some interesting headlines there. Pretty busy overview. And we head into the session in around about 45 minutes time in an interesting position on quite a few of these markets. The question is, can the momentum on the upside continue in equities? Can gold find support? Oil, of course, has got its own story. It's been putting in several high lows on the intraday time frames, but now coming up against what was recent resistance. So you can see high, low, high, low, high, low. Can we be able to push through this level here where we've got knocked back off resistance, or will we see a rejection? But these high lows support a continued push through this area, and we can look for moves into 76.20 on crude. Not much else to add from my end, so I'll wrap up the brief there. Thanks everybody for listening, and all the best with your trading. Bye for now.